You are watching Closing Trades. I'm Harsh Saita and you're watching ET now. Let's look at what is happening on the Nifty, and 0.9% higher on the Nifty 50 index. Let's talk about some of the big gainers of the day. It's Adani Enterprises leading the charge with a likely 25,000 crore raise in the pipeline. Rights issue is what is anticipated, price being 1,800 apiece. So you're seeing that one fly away in trade, as would be anticipated. There's Tech Mahindra as well, and all of the IT counters doing extremely well. Tech Mahindra, TCS are among the top 5 gainers on the Nifty, but look at the gains more importantly. TCS up 2.5%, Tech Mahindra up 3.4%, and that is also lending support to the IT index, which needs no support, frankly, because this week it's been a fabulous week for the Nifty IT, as Kunal and me were just conversing. Let me talk about the other one gaining again is Adani Ports. Within the top 5 gainers of the Nifty 50, it's 2 Adani names, 2 IT names, and then there's HDFC Life and Bajaj Finserv, the insurers. So that's the texture, that's the flavor. Also, 38 advances to 11 declines. So the breadth is extremely strong on the Nifty, and that's leading to the kind of 200-point rally that we've seen. Tata Steel, Tata Motors, PV in focus. Both of those stocks on different news basis are down 1% plus each. So you're seeing some pressure on that pocket. Bajaj Auto is down. Shriram Finance is a bit more subdued. And so is BEL, taking a bit of a breather after the kind of rally that we've seen in the defense index as well. So that one is more subdued, but the defense index is up 0.5% nonetheless. So it's doing fairly well for itself. But IT, that's surely the story of the day. Talking about other names which are buzzing, Emphasis is up 2.5%, Persistent up 2% as well, and Oracle Fin is the other one, up nearly 2% in trade. So having a fairly good day, that entire pack. Let's talk about the metals pack as well, absolutely flat, and pharma is up 1%. And so is auto. So pharma and auto are the other 2 buzzers in trade today. Let's talk about auto first. Hero up 2% within the Nifty pack as well. Exide is up around 1.3 odd percent. Tube Investments also up 1% thereabouts. So no meaningfully big movers, but you've got a bunch of stocks sitting in the green where auto is concerned. Pharma is doing well for itself. 5% on Biocon on the back of those numbers that it came out with. Natco Pharma up 3.25%. Lupin is up 2.25%. And Ipca Labs also up 2% odd. So those are some of the movers in the pharma pack. Plenty moving on the back of earnings. And of course, the most recent one being that of Tata Steel. But Yatra is up nearly 12%. Lupin is the other one. Again, came out with numbers within the pharma space. I did speak about it as well, 2% higher. Precision Wires on the back of earnings is again up 2%. These are some of the numbers that have come today, some of these. Let's talk, Yatra came yesterday, of course. Let's talk about the broader markets. Kirloskar Oil, 14.5% higher. That move and the kind of numbers that the company clocked, extremely strong. IOL Chemicals is the other one, 10% higher. Avas Financiers up 7.5% as well. Some of the big losers, Sharda Motors, Office Space, they've been losers since the start of the day, continue to be the key drags among the earnings candidates, at least in trade today. Kunal, what are you seeing? What are you tracking? What are you liking at this point?
Yeah, everything about the market so far. The indices are doing fairly well for themselves. The sector mix is also quite, okay. You've seen emergence of a new sector, the Nifty IT index, which has made a dramatic comeback in the last couple of days specifically. It's now in touching distance of breaking past above its 200-day moving average. And this is happening after almost 9 to 10 months of the Nifty IT index remaining below the 200 DMA. That I believe is a very, very important trigger for the sector overall in the near term. All in all, I think with the VIX remaining at 12.5 odd range, the premiums still almost at 85 to 95 plus points for the Nifty. We're holding on to that 25,750 plus mark, quite comfortably on the spot levels, inching towards the 26,000 mark. That I believe could be a breakout zone yet again for the index. So, like what we were discussing yesterday and today morning, my expectation is 26,200 potentially over the next couple of days.
Okay, so that's the technical take. Kunal, 2 pockets very quickly, banks and IT. Banks relatively subdued, 0.5% higher on the Nifty Bank. Again, some amount of zing within the PSU banking counters, chosen few, but we're seeing that. What about IT? Just give us a sense on both of these.
Yeah, so I think it's good to see the banks consolidating, frankly, because had it been banks which is the only performing sector, then you would have gotten yet again into a skew with respect to the sector positioning. So that I believe could be a positive actually for the overall market, that you're not too much dependent on the performance of Bank Nifty to take the Nifty higher on a short-term basis. On the other hand, I think Nifty IT index is at a very, very crucial juncture. So I was just mentioning that we are on the verge of breakout of the 200 DMA for the Nifty IT index. And look at the way many of these large cap stocks have moved. You've seen Infosys moving up by almost 50 to 70 points in the last few days. TCS has moved more than 120 odd points in the last couple of trading sessions. So good recovery in the mid cap end of the IT stocks as well. So I think we are looking at a potential trend breakout for many of these IT stocks. And with the confirmation of 200-day moving average, if it happens, say by tomorrow or day after, then we could be looking at a further 3 to 5% swing up move for many of these IT names.
Ashok Leland's numbers flashing on your screen. I'm going to quickly pull out what the expectations also were. But broadly, you're seeing margin uptick of around 50 odd bips. You're seeing PAT at 771 crore, which is absolutely flat on a YOY basis. A top line, as was expected, at least by Motilal, to be in around the 9,700 crore kind of number. EBITDA has come in at 1160 crore versus 1017 crore. 1160 is slight bit better than what most analysts were anticipating. 12% is where the margin number has come in at. 11.8ish to 12ish is what was expected. So clear positive bias with regard to how the numbers are playing out. Of course, the stock looking choppy as we speak in trade. We'll wait for those that choppiness to settle to try and understand exactly how the market's reacting to it. But of course, Ashok Leland's numbers coming straight through. Yeah, 770 crore is where the PAT number has come in at. Motilal had an estimate of around 745 crore. So broadly in line, maybe slight bit of upside with regard to what the estimates were where Ashok Leland is concerned. 12.1% is where the EBITDA margin has come in at. Do you have a view on Ashok Leland or any of the CV plays? Because we are Tata Motors CV also list today. I know that you won't have much of a chart pattern there. But talk to us about Tata Motors, Ashok Leland as PV, Tata Motors and Ashok Leland. How are they as plays? How are you seeing it?
I think Ashok Leland has been a class apart, frankly, because I remember, I think, tracking the stock when it was price adjusted, closer to 80, 85 for good part of the last couple of years. And the manner in which the stock has behaved in the last 2-3 months, I think indicates that we are looking at a fresh, round of a breakout momentum, call what you may want to, for the stock price. It's still looking quite charged, quite strong at current levels of 140, 145 plus for Ashok Leland. So with the entire auto sector reviving in the last couple of months, we've seen Ashok Leland also doing fairly well. Tata Motors, on the other hand, the stock has disappointed in the recent price terms. I think post the demerger, adjusted towards 660 levels, which was the price earlier for both of the versions. We are now looking at the stocks just about settling at this 400 range. So no major chart view for Tata Motors. The stock is still going into a zone of consolidation as of now.
Okay. All right. So that's on some of the CV names, and especially Ashok Leland. 9588. The top line was a slight bit weaker than what estimates seem to be suggesting. So maybe that is causing a bit of apprehension, if at all any, on the counter. But really, it's been in the red for a better part of the day. So at least that's how it's playing out. Now, I want to, Kunal, talk about the other big mover today, Kirloskar Oil Engines. I'm sure you don't track this closely, but just the kind of move that the stock has shown, 14.5%, 15%. Talk to us, any new levels that are opening up for this one?
Yeah, it seems to be a very strong breakout for Kirloskar engines, and I think after this kind of a gap move on the back of higher volumes, this could probably indicate that we could be looking at a further upside. What this has also done is it's taking the stock back towards a breakout on a YTD basis. So I think 2025, the stock started off into a downtrend closer to this 1050 levels. From there, the stock corrected towards 540, 550 mark, and now it's come back towards 1080. So it's almost like reversed the entire course of price correction. But there's much more to do for the stock to recover from its previous 2024 highs. That's closer to 1400 plus mark for Kirloskar engine. So it looks to be a stock which is going into a recovery phase, and the near-term charts look to be quite robust.
Okay, so that's with regard to Kirloskar Oil. Let me read out the numbers as well. Revenue up 30%, 1948 crore is the revenue number, highest ever revenue, mind you viewers. 28% growth in EBITDA on a YOY basis, 382 crore. That's also a quarterly highest ever. Net profit also quarterly highest ever at 162 crore. Margins at a multi-quarter high. In fact, it's been probably third, fourth, 3 or 4 times in the last 13 to 14 quarters where margins have hit 20%, very close to 20% this time around as well. So very, very strong set overall. 28% growth on EBITDA, 27% growth on net profit. Let's go across. We spoke with the management. Gauri Kirloskar, who's the managing director at Kirloskar Oil Engine. She shared her views with regard to the growth guidance, and she is also aiming for a $2 billion revenue by 2030. Also sees headroom for margin expansion from here on. Listen in to what she had to say.
General domestic demand is what has been driving our growth, and we see this continuing at least for the next 6 months or so. In terms of revenue and margin guidance, as you know, we have set up a 5-year strategy, which we call 2B2B, which is to be $2 billion by 2030. It's a very aspirational target, but that's what we're working towards. So that's our revenue target. And on the margin side, even though we have been improving quarter on quarter, I do believe that with the product mix changes that we are aiming for, as well as the exports growth that we are aiming for, we do think that there's headroom on margins and we can improve there.
Okay, so that's on Kirloskar Oil. Stock obviously up and away in trade. Kunal, your picks for this afternoon?
Yeah, so I'll go with a couple of buy calls. Adani Ports is something which I highlighted in the morning. The stock is doing fairly well for itself. So maintain the targets of 1550 for Adani Ports, which I highlighted in the morning also, with a revised stop loss at 1490 for someone who's taking a trade at current levels. And on the other hand, I would look at HDFC Life. Now, the insurance stocks are slowly and gradually getting into good pace, on the upside over the last couple of trading sessions. HDFC Life at 775.80 levels is also likely to head into a breakout. So I think that would be an interesting short-term idea which I would recommend with a near-term target of 810, stop us at 765.
Excellent. What we'll do on the back of that is allow you to digest those picks, and we'll slip into a very short break. On the other side, we'll speak with Ajay Bagga, talk a little bit about fundamentals, get a sense of where the market is shaping and going ahead. Rather, we're just about 400 points from all-time highs, so trying to understand where we... Welcome back, and time to switch to a fundamental conversation now. Ajay Bagga joining us. Again, we've seen a very good rally on the index, Ajay. Of course, Ajay Bagga, independent market expert, here to speak with us. Ajay, always great chatting with you. Let me contextualize this for us. How have you viewed earnings for Q2? That's point number one, versus what you were penciling in. How have the actual numbers translated? We're at the fag end. And point number two, this market now pushing towards all-time highs. Warranted, or would you believe that there is some exuberance in some pockets? Give us a sense.
No, I think it's much warranted. Overall, we have underperformed on a relative basis versus EMs by about 30% over the last 12 months. 13 months of being below the previous all-time highs, and we have not been able to scale that number of September 2024. Normally, on a median basis, this bottoms out on 10 months. So this has been one of the prolonged downturns that we have seen without an economic recession. So there was economic growth. Of course, there was a small earnings recession. I would say there were downgrades. The downgrades have bottomed out in the previous quarter, probably. This quarter, we have seen more of upgrades than downgrades coming in. Earnings have been above expectations, so mildly above expectations. Expectations were very muted, so that has helped to have earnings above. But the good news is the earnings downgrade cycle has bottomed out. That's the first step in the market's recovery. The second now to come will be some catalyst in the form of, say, a US-India trade deal or reduction in tariffs, even if it's not a full-fledged deal. The second overhang for the markets was really what happens on the FPI flows. So flows have gone largely to tech sectors in various EMs. That's where the lion's share of flows have gone. We could not offer an AI manufacturing or AI direct beneficiary sector as such. So that became an issue for India apart from the valuations. But the good news is at 13 months of underperformance, you're not seeing this being repeated over the next 12 months. History shows that after such a strong underperformance, we normally get a very good 12 months going ahead. So we are expecting a turnaround in the markets. Might take a couple of months more, not very sure about that. Sentimentally, the US-India trade deal is one very big catalyst. Second, state elections don't normally impact the markets much. Even if it's a short-term impact, it gets watered down very soon. This time around, Bihar, the markets have seen with some trepidation because of the coalition government at the center. So 12 JDU MPs, add to that the 16 TDP MPs. Together, they would make the government a minority government. So it was very clear that the NDA needs to win Bihar. And so then the central government stays strong. Looks like that as per the exit polls last night. We can't say fully surely until the results are out on Friday. But the betting markets, the prediction markets, all are pointing towards an NDA win. That will consolidate the market. So today's gap up was more on the back of that. Globally, US government opening happens by tonight. That will help sentiments. At least the financial flows will restart. There is a big fiscal stimulus coming in the US starting January with the big beautiful bill coming into play. There is a stimulus coming. So overall, we are setting up for a Santa Claus rally by going into the year end globally, and that should help the Indian markets as well. That would be my prognosis for the next couple of months.
Fantastic. So you've set it up very, very well, Ajay. Give us a sense, this gush of liquidity, where does it go?
Yeah, we are going to see some of it returning to India as well. So there are sectors in India where, again, you saw the Goldman and HSBC reports. So Morgan always has been a very strong India bull right through the downturn. So we have 3, 4 very large foreign brokerages now getting positive on India on a 12-month basis. And that's just the start, I feel. We are going to see more of that coming. So India should start getting its fair share of 7 to 10% of the EM flows should start coming back to India. That re-rating is coming. So we have paid our dues in this 13 months to a large extent. Overall sectors that will benefit, I think financials stays the top one. Infrastructure, going with this government's priorities. Rural demand has been quite strong. Urban demand has been lagging. That should catch up. So you have seen autos doing well, for example, with the GST cuts or durables, autos. These should continue to do well. I think these are some of the sectors. Turnaround is coming in IT. As I've been saying, the end use cases will start coming through. Now, very high capex is being put in on AI. And, what has been shown by previous research, there's very interesting research right from the railroads in the US in the 1860s and then railroads in Europe going through the automobile segment in the early 1900s across the world. So various bubble periods like this or boom periods like these, who benefits? The companies actually investing. The investors in those companies make 4% of the return. 96% of the return is made by the consumer of these companies. We have seen that in telecom in India, for example. What started in 97, 98, we used to pay like 32 rupees per minute and stuff like that. See where it came down to virtually free phone calls and virtually free Wi-Fi. Hardly anything you're paying. So consumers have benefited. Same thing will happen with AI. It's coming. And our companies will make the end cases, the end use cases. So that turnaround is coming, but you will need people who are able to sell that to clients, people who are able to implement. Right now, implementation is very shoddy. MIT, McKinsey reports have shown 95% no impact. You try to go into any bank's website try talking to a bot or an agent. They just don't understand. And anything little bit complex, they mess it up. So it will be very critical. And that's why the mid-cap IT is being more favored, that these are younger companies. Hopefully, they will be more fleet-footed than the large giants. But I would again bet, like auto, we kept saying legacy guys will move from ICE to EV, and then
Right.
they will have everybody's breakfast, lunch, dinner. Now you're seeing the EV startups are not doing that well, at least in India, but the legacy guys have taken over. So that's going to happen in IT also. The big giants will turn around eventually, and we will benefit from the AI. So the market is showing that to you with the way the IT sector has been getting slowly re-rated, but it's a good point now to get back into IT.
Good point to get back into IT, and that's exactly what the market seems to be doing over the course of this week at least. The last 3 days, the IT sector has been up. What we'll do is we'll step into a very short break, continue the conversation on just the other side. Stay with us.
Back, you've still tuned into closing trades right here on ET Now, and let's now put the spotlight on HAL. That one has just reported its numbers, and we have seen quite a bit of downtick after it reported its numbers. Revenue has seen an uptick of 11% YOY, but despite that, operationally it definitely looks like a weak set. EBITDA is down 5% on a year-on-year basis. EBITDA margins too have contracted to nearly 23.5% versus 27.4% that the company had reported same time last year. We'll try and out more details on this, but in the meanwhile, we also have Nagaraj Shetty now joining us. Nagaraj, if you can take us through what you make of the chart check as far as HAL is concerned. That stock is down in trade today.
Nagaraj, Hi, good afternoon. Yes, after a stellar of last 3 sessions, the stock has reacted down from the higher levels. I think 49.50 is going to be a strong resistance. I'm not expecting a bigger decline from here onwards. At a lower level, 4650, 4600 is likely to offer a strong support. And from there, I'm expecting bounce back in the stock in the near term.
Ajay, do you like defense as a pack? Is that something that is on your radar? Do you see value within it? What do you make of the run-up? And or are you just waiting for execution to start to play out?
Growth is there, and long term, but you will see these cycles where 3 months they go up, then they give up a big part of those gains, then again they start. So order books are great, and the mega trend is there. India will be a big defense supplier to the world, not only to the import substitution, but we will supply a lot to the global south. So all these companies will do very well, but you have to have patient capital for this. So you will see these downturns, you will see this quarter by quarter issues, but the order flows are very strong, execution capabilities are there. So these are growth stocks. You have to be very patient with them and have a 3-year, 5-year holding period. You will be well rewarded across the cycle. So overall, a very good sector to be in, but valuations are not cheap, and you will see surprises continuously every 3 months, 4 months. You will get some surprise or another.
Right, the stock is down. We're talking about HAL. That one reported its numbers, and the stock is down 3% from the highest point of the day. Clearly, weak set of numbers. The street is not happy with the margin contraction that the company has reported. But we need to slip into a very short break, and as we do that, reviews have started pouring. But Anand Rathi conference is underway. It will go on till the 14th of November. In fact, we have a whole host of managements that will join us on the sidelines of this conference. But today, on the onset, we have Mr. Anand Rathi, chairperson at Anand Rathi Group, and Mr. Pradeep Gupta, vice chairperson at Anand Rathi Group. Gentlemen, thank you so much for joining us here today on ET Now. Mr. Rathi, coming to you first, and let's talk about the conference itself. If you can take us through the key objective behind the G200 conference, what are you aiming to achieve from this? Which sectors are you most excited to interact with?
This is our third G200 conference, where we invited 200 companies and almost all investors, whether mutual fund, insurance, or family offices, to meet these 200 companies. Obviously, the objective is that in a very short period of time, the companies can meet investors and investors meet companies, and these companies are coming from various different segments of businesses. So I think this is a very productive conference for 3 days, where we hold large number of more than 10,000 meetings between the companies and investors. Objective is obviously to make companies able to give about their business standing today and the future to the investors who are already in or would like to invest with them. And similarly for investors, this is a great opportunity to meet so many companies in a short period of time and therefore get much faster knowledge.
And which sectors are you focusing on? What are you looking forward to over the next 2 days of the conference?
See, the overall theme of this conference is Bharat, and that is what is a different Bharat, an innovative Bharat. And that's where the selection of companies which we have done, about 200 companies which are here, largely coming from technology space, new innovative technology space, renewable energy space, aerospace, and those companies which are upcoming and probably maybe a future candidate of new Bharat. And that is where we are focusing, and most of these companies are making their presentations before these various different clients. So in these 3 days, what we have done is we have created about more than 9,000 requests which we are trying to address of the meeting. We have already, fixed up about 7,000 plus kind of meetings, and we believe that another 2,000 meetings are also going to be taken care of and accommodated for various different investors. What we are going to achieve, those investors will obviously know each other about these companies really well. These companies can present their viewpoint, and these investors over a period of time, I think, understand these companies well in depth and probably take a decision how and what way they are going to take in respective terms. So that's the overall objective which we have created, and I think it's a win-win situation for each one of us by providing this platform for these companies.
Understood. And let's also talk about the mutual fund industry. Industry's total AUM has now crossed that 79 lakh crore mark, reflecting robust participation despite market volatility. How is Anand Rathi Group positioning itself to capture the expanding investor base, both for the wealth management business as well as for the broking business? And Mr. Rathi, this question is for you.
You see, we as a group are in different businesses. Particularly on distribution, we are very strong. A wealth management company does distribution to high net worth individuals. Our stockbroking company does distribution to mass affluent and retail. Also, we have other platforms through which we are doing the distribution, like digital wealth, etc. So I think our objective is to capture significant amount of distribution of financial products market in retail to the high net worth, ultra high net worth. And that's why we have different businesses working on different profile of customers.
And Mr. Rathi, your take on the mutual fund equity inflows? They've moderated month on month. SIP collections remain strong at around 29,529, which is largely flat. What does this say about investor behavior, and how are your advisory teams guiding clients to this phase?
You see, by and large, investors are creating more and more confidence in the equity markets. SIP obviously is meant for people who want to do the regular investments, and that's why SIP is picking up. It's picking up and it's going to pick up, because that takes care of also the volatility of the markets and also a continuous regular investment. As far as other investments are concerned, people high net worth sometimes look at the trading opportunities. They exit the markets when markets are high, or if they enter the market when they're low. So that behavior will, but on the whole, there is always continuous inflow of money coming into the retail markets, combined retail or HNI. And therefore, we see a great future of equity market ahead. That's why we are trying to capture a market share in each one of the segments where the investments are coming from.
And Mr. Gupta, wealth management arm has also been focusing on PMS, AIFs, alternative investment funds and different portfolio strategies. Given the current inflow trends, especially with SIP still continuing to be at lifetime highs, are clients now open to more active management over passive investments? And what is the kind of trend that you're seeing as far as active versus passive is concerned?
No, if you really see, I mean, our wealth management company, which is purely wealth arm, they are limited, they have got very limited offering. Because over there we are addressing with the solution-driven approach. And in our solution, based on whosoever is liking this kind of a solution and tuned to that solution, largely mutual fund and structured products are the two offering. So in wealth arm, we do not have PMS or AI. But when we are talking about broking and distribution company, which is underwriting share and stock broking, obviously we are seeing, what our offering is, which is the best manufacturer of that particular product. We are giving that particular product to that customer based on the allocation of money which he is allocating to various different product, and we have created a basket of that product for them. So that money is obviously coming in, and we are seeing in mutual fund and PMSs, people are still interested in looking at as an investments, and that I believe is going to be there because there is a positivity from a long-term perspective. Whosoever is a long-term investor, from a long-term perspective, investor is looking equity as a long-term positive investment, and they are allocating their share over various asset classes as well as various different products.
And Pradeep, with mutual fund penetration deepening, SIP flows resilient, what's the group's medium-term view on India's retail investment story? How do you plan to capture this structural opportunity?
So basically, if you really see, I think most of the investors who do not want to enter into a nitty-gritty of equity as an asset class, direct equity as an asset class or product, I think mutual fund is the best route for them. And more specifically, I take the retail investors who have got a limited amount of money to be shared. I think SIP route, investing in mutual fund is absolutely right way, and they should start looking at that. And that is what is panning out over a period of time, and which is being reflecting that our investments, savings portion of investment side, largely on equity side, is increasing. And similarly, our investments through SIP route and our SIP numbers, AUM through SIP numbers are constantly increasing. And as you rightly said, has reached to almost 29,000 crore per annum.
Right. And Mr. Gupta, the group has also highlighted technology as a key enabler for growth going forward. How are digital tools being used to analyze client portfolios and recommend asset allocation in line with changing fund flow trends?
So there is a constant improvement and innovation which is happening on digital platform. And we are constantly providing, and upgrading our digital platform deliveries to our customer base. whether it is on a broking side, making broking businesses, or distribution side where probably people can come and start investing in various different products like mutual fund, fixed deposit or insurance. So we keep on adding those products into our kitty. Coming back to how we are changing the scenario because of involvement in AI, lots of improvement is going to happen. Lots of developments which is happening in terms of understanding customers' requirement, making allocation of that customer, maintaining those allocation, and providing the product basket which is suitable to that customer is going to happen. And we are also improvising those kind of deliveries, product deliveries before the customers.
And Mr. Rathi, let me come to you. Last question, given this interplay between retail resilience, product diversification and your growing client base, how is Anand Rathi Group redefining its role as a holistic wealth and investment platform for the next growth cycle?
See, what you're looking at is that we should try to help investors of all segment, all size to optimize their returns and more importantly, risk-adjusted returns. Because obviously the equity as an asset class is the most effective, most remunerative asset class at the moment in India and going to be there for many years. So what we are trying to do is to look at the need of each customer, what is that he needs, and based on the need we try and allocate their assets into different classes. But primarily we want to drive that if the money is for long term, we try to allocate more money to the equity as an asset class through the mutual funds or maybe retail clients for the direct stocks. So this is actually dependent on the need of the customer whom we are serving, and that's how we have prepared our entire strategy or value proposition for different type of customers in a different way.
All right, so all eyes on that, and we will also have several management join us over the course of the next 2 days. Mr. Rathi and Mr. Gupta, thank you so much for joining us from the sidelines of Anand Rathi conference. Meanwhile, let's also take a look at what markets are doing at this point in time. Nifty now up nearly 200 points, sustaining near that 25,900 mark. Nagaraj, coming to you then, several of these stocks from the broader markets continue to remain in focus. Kirloskar Oil up 12% on the back of strong set of numbers that it reported. IOL Chemical up 11%. What do you make of these and any buy calls coming in? Do you expect the up move that we have seen today to continue?
Yeah, to be with the IOL, statically it was in a continuous downtrend over the last couple of months, and from near 200-day EM, it has bounced back strongly with the gap up opening. I think technically it looks like a formation of a breakaway gap, which are normally formed at the important bottom reversal. I'm expecting a crucial bottom reversal for IOL Chemical somewhere around the 90 levels, and from here onwards, the stock could go towards the next hurdle of around 110 levels in the near term.
Okay, Nagaraj, we'll leave it at that. Thank you so much for joining us this afternoon. We'll let you go on that note, and what we'll also do is slip into a very short break. We'll continue to talk stocks on the other side. Stay with us. Surged 11% higher as we speak. We have Sandeep Jain, who's the Executive Director at Monte Carlo Fashion. Hi, good afternoon, Mr. Jain. This is Harsh here. Let me, sir, start off by trying to contextualize what these numbers indicate. Typically, you've seen around 200 to 220 crore in terms of your top line, at least last couple of years. This year, Q2 top line has been closer to 250 crore. What's led to that surge? Give us a sense first to start off with.
Yeah, good afternoon. So, even in an earlier con call also, we have given the guidance of 10 to 15% for this financial year, and we are moving in line with our guidance. And basically, the factors behind this was increase in the consumption spending, more of because of income tax cuts, GST cuts, and other factors, even the low inflation. So that has boosted the spending. And that is why we have indicated in our con call also that we intend to grow 10 to 15% in this financial year.
All right, and because third quarter is a seasonally strong quarter for you, what is your outlook when it comes to the third quarter, and any new categories that you're looking to expand into?
Going forward in this season, we are very optimistic. The reason is already I have mentioned. And another reason is that we have a very good wedding season also in November. And the categories which we are focusing is basically all our existing categories plus our athleisure wear rocket and our home textile range. So all the categories are contributing in the increase in the sales. And we are very optimistic that there is every chance that we may improve our guidance also once we end this quarter, as the sales have been good.
Right. Mr. Jain, this, which is Q3, is seasonally your strongest quarter and by a mile. Trying to understand what's in store when you're looking at the next 2 to 3 years. Are you trying to, in some form, fashion, try and diversify your business, try and make it more equitable across quarters, or will Q3 always be the strongest quarter?
See, let us view this in this way that earlier the winter contributor used to be 100%. And last few years it has came down to 60. And this year it should be 54-46. 54 would be contributed by winter and 46 would be summers. So we are becoming almost equal in our winter and summer range. So going forward, I think it will become 50-50 in next 1 or 2 years. So that is giving us confidence that so we are operating in all the 4 quarters and the sales have been increasing quarter by quarter.
Impact of GST rationalization that you're expecting in this Q3 versus last year?
Yes, definitely. The GST cut has definitely helped as it has boosted the spending. And of course, the low inflation and the income tax reduction, which happened, few months back, that also has helped us for boosting the consumption.
What does this change of mix in terms of quarterly performance do to your margins, sir? Give us a sense.
Margins, sir, I think already we have indicated that we should be around 200 basis point plus as compared to last financial year. And the raw material is very stabilized, but there have been increase in the prices. So that will help us improving the margin in this financial year.
FY 21, 22, 23 margins were roughly 20%. What's been the cause of those falling towards the 14, 17, 16% kind of number? Give us a sense.
I think there were 2 reasons for that. One was that the end of season sales used to start very early because of online have started sales. And second reason is that people are tending to buy in discounts. So that is why the margins have fallen. But we have taken some actions on this. And because of that, we see that this year there should be a jump of around 200 basis point. And next year also we see an improvement in margins going forward. And we expect that we should be the range where we were operating in 21, 22, as you rightly mentioned, in next 2 to 3 years.
Okay, and what will your export guidance be? I believe you were also looking to expand and open more stores. What will your guidance be over here?
Yeah, we are not into exports much, so that is not any contribution from exports. But yes, the store guidance is around 45 to 50, which we guided earlier also, and we maintain the guidance. 45 to 50 stores in this financial year.
Okay, we'll let you go on that note. Thank you so much for coming in and speaking with us. Asian Paint numbers, viewers, flashing on your screen. 994 crore is the profit after tax versus the 888 crore same, which was what was anticipated or penciled in basis the ET Now poll. Of course, the growth has been extremely strong where profitability is concerned. Versus the 694 crore number, it's a 40+% surge that we've seen on the profit after tax number. The revenue also has come in at 8531 crore versus the 8156 crore which our poll had indicated. And you've obviously seen a decent growth come in on the top line number as well. We'll await the margin number that will hold the key. But my guess is it's a very, very strong margin beat that we're seeing where Asian Paints is concerned. 16.5% was what was penciled in terms of the margins. It seems like it's a very, very strong beat on the numbers. Let's pull up the stock price. I can see that green bar, that spike coming in on the stock, and 2.5% higher on Asian Paints as the numbers start to trickle through. So that seems to be how the numbers are playing out. Profit is a beat. Top line too is a beat, I must say that. And margins, as they come in likely, are going to be a beat as well. So we're waiting and watching for that margin number. We have Kaustubh Pavaskar, in fact, lead analyst at ICICI Direct, to talk to us about Asian Paints numbers. Kaustubh, great having you on the line. Good afternoon. Talk to us about how you're viewing the numbers very quickly.
Quickly on the numbers, the revenue figure is better than what we were anticipating. In fact, we were anticipating around 2% growth, and I think revenues came in much better than expectation. Waiting for more in terms of what was the volume and realization growth, but volumes were expected to grow by around 4%.
Okay. We seem to have Kaustubh on a patchy line. That consolidated EBITDA number coming at 1503 crore versus 1240 crore same time last year. Strong spike on that absolute EBITDA number, and it's a very strong beat, 17.6% on the EBITDA margin number versus the 16.5% anticipated. Kaustubh, what's leading to that beat? Give us a sense.
EBITDA margins came in better than expectation. I think we were anticipating at 16.2%, and the 17.5% is a really good number. Need to get into more into the details, but I think we need to look into how the gross profit margins were there for this quarter, especially when and the EBITDA performance looks really good, considering the fact that there was a lot of competitive intensity which was there in the market. So considering that, I think the EBITDA margin numbers also look good.
Led Kaustubh. Kaustubh, is this beat likely to be volume led? 4 to 5% was the anticipation, especially in the decorative business. Do you believe that that's where the beat is coming from?
So that we need to check exactly, but overall the decorative business, the revenue growth stood at 6%, and yes, the volume growth stood at 11%. So I think 11% volume growth for the India business is much better than what we and Street were anticipating at around 4 to 5%.
Exactly the point that I was trying to make. 11% volume growth is what the decorative segment has reported in the second quarter, with revenue growth of 6%. It has reported strong double-digit growth in the industrial segment business. So this clearly has outperformed, and that has led to the overall beat in the second quarter. As far as international business is concerned, that also grew by about 10% YOY. All product categories contributed to growth is what the management is saying. In fact, the management also says that growth is accelerated by enhanced performance in their automotive and industrial products coating segment, which contributed to the overall growth. Kaustubh, your thoughts on the decorative business in particular? 11%, much better than what the Street was working with, although the business landscape continues to remain very challenging given the competition the industry is facing.
In fact, 11% volume growth is quite good, considering the fact that the monsoons were elongated. Festive period was very limited. So considering that, 11% volume growth is quite commendable. Would like to hear more from the management what exactly drive to this growth, but I think it was much better than what we and Street were anticipating for the quarter. Important to watch out would be the commentary going ahead in terms of how the business environment would be in the domestic market.
Kaustubh, I'll go slightly easier on you. I know we focused a hell lot on the numbers, 5% higher on the stock as we speak. So stock is really flying. Give us a sense on how you're looking at the paints industry as a whole. Let's zoom out a bit. There's been plenty of competition. Do things start to level off now? Does Asian Paints start to run more like what it was pre all of the competition that came in?
See, it is difficult to say at this juncture because the new entrant has already is penetrating well in the market. It has captured a good share. So from here, how this competition is heading up, that we need to wait and watch. But I believe that looking at the volume growth what Asian Paints has, even I think the Asian Paints is also looking at, improving its shares with whatever initiatives it has taken in terms of innovation, in terms of improving, overall distribution in the domestic market. So I think, we need to get more clarity on the same from the management from here, where they look whether this volume growth momentum is sustainable, or this competitive intensity is going to further have some impact on that.
All right, so that's some commentary, of course, from the management will be awaited. The stock, remember, is up 5% today, but on a year-to-date basis also, the stock has run up quite a lot. It's up 21% on a year-on-year basis. Kaustubh, as far as valuations are concerned as compared to its peers, and given the kind of outperformance that we have seen in the stock, your thoughts on what the fair value could be now?
See, we will work on our numbers, because the numbers are really better than what we and Street were anticipating. So, working on the numbers and what the outlook is in terms of the growth of the domestic as well as international business and some of its other home decor business, that will give us a clear indication from here how we can look at the fair value of the company. But as of now, the numbers look quite good, and whether the momentum would sustain in the quarters ahead, that will give us a clear indication, how the stock will perform, and in terms of how we should look, in terms of valuation also, how we should look at it.
Okay, Kaustubh, we leave it at that. Thanks so much for coming in and speaking with us in an extremely tight timeline. And Asian Paints, while we were speaking with Kaustubh, has gone up from 2% to now gaining 5% in the trade. Let's talk to Anand Tandon, independent analyst coming and speaking with us. Anand, we're speaking about paints. Give us a sense, this very strong growth that Asian Paints has clocked in this quarter, Q2, double-digit growth leading to a beat in earnings. Is it turning a corner?
Well, one could certainly say that. I mean, frankly, one could have anticipated that the results will be good, simply on the fact that there has been a management change in Birla Opus, and that itself gives you the indication that the competition has not managed to breach the fortress Asian Paints. But despite that, the volume growth has been impressive. One has to wait to see how the management responds. But the reason for staying away from this sector was twofold. One is that there are too many new players coming in with a lot of capital, and therefore the competition intensity would have increased. And along with that was the challenge of the valuation that Asian Paints is far from cheap. But the first one now seems to have somewhat receded, and from that perspective, one major overhang on the stock is perhaps gone out, assuming that this trend can continue.
Right, so the stock clearly is expensive, but let's also get a technical view on this, Kunal. After the 5.5% run-up that we are seeing, the stock is at, it has crossed that 2,800 mark. Technically, what does this suggest now?
Yeah, this could be a very potential, very strong up move for Asian Paints, because this takes the stock back towards filling a major gap which was there since, I think, November 2024, October-November 2024, from where the stock had fallen from 2,800 levels to a point where subsequently in 2024, the stock had fallen to 2,400 odd levels. So that 400-point gap for the stock, that gap has been filled today after this kind of an up move. And this could probably and potentially indicate that we could be looking at a turnaround of sorts for the stock in the near to medium term.
I want to read out some numbers, and we'll stick with Asian Paints for just a moment. Decorative business registers volume growth of 11% YOY, international business at 10%. Decorative business registers, I did mention the volume growth, but the revenue growth is 6%. Anticipation was 4 to 5% in terms of that number. And the bath fittings business, around 5% of growth coming there. Kitchen business around 7%. And white teak of around 15%. But those are relatively smaller parts of the business. Really, the chunk is obviously the decorative business and the international business. Both of those have done fairly well for themselves. So very, very good set of numbers coming in from Asian Paints. As we unpack it and as management commentary comes through, we will keep you updated. 5.5% up now, Asian Paints on the back of those numbers. So good, strong set. You also have Varroc Engineering, which has come out with an okay set of numbers, frankly. You've got revenue up around 6%, EBITDA up around 2.5 odd percent, and then you have profit up around 9.5 odd percent in Varroc Engineering. So that's how it's playing out, at least at this point. But yes, Asian Paints is currently in focus, and we'll see where that stock settles in at. The other one which is flying in trade is a Yatra, 11.5% higher. Global Spirits as well came out with its numbers, 6% higher. Jamna Auto came out with numbers, 4.5% higher. And you also had an Info Edge. The numbers also looked quite decent. Margin expansion seen over there. And you're seeing that stock up nearly 3% in trade. Yatra, Kunal, does it pop up on your charts? No.
I don't track this.
No. Okay. All right. Okay. And what about Jamna Auto? Some of the auto names?
Yeah, I think now is the time where many of these auto ang stocks are starting to look attractive. Jamna Auto in the last 3 days has moved up 10% from 90 to 102 odd mark. The near-term resistance for the stock is closer to 110 levels, and with this move, it establishes a good support at this 90 level. So near-term wise, we are looking at the stock trading to this range of 90 to 110.
All right. In fact, we also spoke to the management of Yatra. That stock is up nearly 12% in trade today. Let's go across and listen into what the management had to say when it comes to outlook for the second half.
We continue to carry a very strong pipeline. There are a large number of corporates that we are currently in final stages of discussion with. So we will continue to see this momentum for the next few quarters, for the foreseeable future, right? I don't see any slowdown really happening in that. We would expect revenue growth to be at least, for the full year, average more than 25%. So it's quite likely that the numbers that you're saying, we should be able to cross those thresholds. Q3 seasonally is a slightly slower quarter for us because for business travel, you've got the Diwali, Dussehra holiday, which takes away 15 days of the quarter. And then you've got the Christmas, New Year break, which takes away another 15 days. So business travel is relatively low during the third quarter. But then again, the fourth quarter has very strong momentum just because, companies are striving hard to achieve their overall targets, sales targets. There is pressure to travel to be able to generate more business as the year comes to an end. So we will see a slight slowdown in the third quarter, but then acceleration again in the fourth quarter.
Perhaps we could see slight bit of slowdown in the third quarter. That's what the management of Yatra Online. The stock, however, is up 12%. It has cooled off a little bit, but despite that, holding on to solid gains. But let's not now talk about steel major Tata Steel. That one will be reporting its numbers today, and we are expecting strong set of numbers on a sequential basis. Remember, steel prices did decline because of monsoon impacts, so realizations perhaps could be on the lower side, but despite that, volumes were very strong. In fact, company has reported domestic delivery growth of about 20% on a sequential basis in an otherwise weak quarter. In a seasonally weak quarter, it has reported strong deliveries, so that is likely to aid standalone business operations. Meanwhile, European operation EBITDA per ton was reported at $8 per ton in the previous quarter. That could come in at $6 per ton. Netherlands is likely to report increase in profits this quarter. Meanwhile, losses for UK operations are likely to expand. Management commentary with respect to outlook going forward, especially for the European operations and the decarbonization that has been going on for both Netherlands and for UK. Any kind of commentary from that will be crucial, and any kind of commentary on capex and steel pricing and realization trend will also be keenly awaited. But the stock, of course, ahead of its results is tepid in trade, down 1.3% as we speak. Kunal, your thoughts on Tata Steel ahead of its results?
Yeah, I would be of the belief that the stock could perform very well. The chart patterns over the last 4 months have been phenomenal for the stock price, where you've seen good recovery from 150 levels to, I think, a point where the stock made an all-time high levels just last week or so. So I think in that sense, the stock is approaching the earnings in the last 2-3 months in a much more positive manner, something which the stock had not shown in the last many months of trading into a downtrend. So my sense is that the stock pattern looks attractive. The only concern for the metal counters is names like Hindalco, which have slipped in the last couple of days, where these stocks have shown an 8 to 10% correction from its recent swing highs. That could be the only overhang which could play out for the stock as such, but the medium to longer term chart patterns for Tata Steel look to be quite attractive.
Okay, Tata Steel, Anand, do you have a view with regard to commodities and specifically steel?
So in general, I'm bullish on commodities. Unfortunately, the numbers that are listed in India are very few. you basically have steel and aluminum, and I think both of them, especially aluminum, has had a strong run, therefore looks a little toppish. Steel is more domestic because of the protection. The international steel margins are nothing to shout about. So from that point of view, if you have to be in it, you should be looking at the domestic players. I think some of the other commodities are ones that one could look at, things like coal, etc., which haven't done much in the recent past, or for example, copper and zinc and so on, where the ways to play it in India are severely limited, unfortunately.
All right, but bullish nonetheless, right, Anand? Is that the right directionally bullish? You may not have specific names there.
That's right.
Okay, point taken. All right, so positive with regard to metals. Talk to us about defense, Anand. It's been one of the bigger movers over the last few sessions. Talk to us about how you're looking at defense.
Clearly, something that has a very strong order book. Unfortunately, the execution capability leaves much to be desired. For most of the leading companies, the ones which are platform manufacturers, which essentially means that the smaller companies are the ones that are able to deliver. The orders, of course, come to the big ones. So the companies like HAL, etc., are still struggling to get their act together. We still have problems that we are dependent on imports for most of the critical components, whether they be the electronics or the engines and so on. But broadly, I think overall defense will remain a theme for many years to come, not only domestically, but across the world. I think most companies have been somewhat re-rated. If you were to look at Indian defense manufacturers, the big ones, they're actually trading at a significant premium to many other companies around the world, including their own suppliers or partners globally. So from an Indian perspective, you should actually continue to hold on to them, obviously. But if you are looking to make money, it might be a good way to look outside India and not just restrict yourself to India.
Yes, so that's the view coming in on the entire defense sector. But Kunal, a whole host of auto counters will be reporting their numbers. Anything that stands out from this sector from a technical standpoint?
Yeah, from the larger cap names, if you ask me, I would look at Eicher Motors and Maruti still to be one of the stronger set. Then you have Hero MotoCorp, which is the other stock, looks attractive. We were discussing Ashok Leyland also some time back. That's a name at 140-45 plus mark, which has done reasonably well. The only stock which I think has underperformed from the entire auto pack is Tata Motors, Tata Motors PV, that is, where the stock has remained to a range in the last 2 or 3 months, just around this 400 mark plus minus 5%. So broadly, I think that stock could continue to underperform. Bajaj Auto also, I think over the last couple of days, we saw some evidence on the charts that the 8700 mark is acting as a crucial support, and that support still seems to be holding on for Bajaj Auto.
Okay, and talking about auto, you'll have Aisha's numbers, you'll have Hero numbers. Srishti standing by with both of those. What to expect, Srishti? Okay. We'll wait for a minute for that to settle. Biocon is the other one, which is up 5%. We'll patch Srishti back in. Biocon, Kunal, what's the view? 5% higher on a day like this?
Yeah, it's as I said in the morning, difficult stock to trade because the stock has this tendency of coming closer to 400 mark, 410 odd range, and then it slips. So we'll wait out for another couple of days. If the stock continues to show acceleration in terms of momentum, sustains this level of 400 mark, then we can eventually see a breakout for Biocon, something which is much needed for the stock, I think, since the last 1.5 year or almost 2 years since 2024 start.
Okay, and let's go back to Srishti joining us for what to expect, Hero and Eicher Motors. Srishti.
All right, when it comes to Eicher Motors, Royal Enfield, what a stellar performance it has been for the company, because the company has definitely outperformed the industry growth. It's a 43% jump in their Royal Enfield volumes on a YOY basis, and along with that, even the Royal Enfield margins are expected to be steady at 26.7%. The exports have done well for the company, and so is the VECV portfolio. Though there were no fireworks overall, it did underperform the CV industry growth, but overall, the industry hasn't been doing very much for themselves. The margins are expected to improve rather for VECV to 8.7%. So that's about the segmental performance, but let's quickly take you through what is the expectation on the consolidated front. The revenue is expected to see a jump of 43% on a YY basis, similar growth number in the EBITDA, while the margins will be the key to watch out for. 25% is what we are expecting, with a profit figure of 1,423 odd crores. So definitely good set coming in from Eicher Motors, but the stock is already very close to its all-time high. So we will watch out for more exciting management commentary, be it from the demand outlook as well as when it comes to the new product launches. Back to you.
Thanks so much for joining us with all those details. So all eyes will be on auto companies that will be reporting their numbers tomorrow. But let's start wrapping up for the day then. And turned out to be a good day after the kind of downtick that we saw yesterday. Nifty is ending 160 points higher, above that 25,850 mark. Nifty Bank underperforming in trade and ending absolutely flat for the day, near that 58,190 mark. In terms of individual stocks, Asian Plains clearly reported very strong set of numbers. Industrial demand grew by about 11%. Volumes grew by about 11% for this segment. So that clearly stood out. 6.5% higher for this counter. Adani Enterprises up 5% on the back of that 25,000 crore rights issue. This stock is also ending 5% higher, some of the top gainers from the Nifty 50 pack. IndusInd Bank up 4%. Tech Mahindra, TCS from the IT sector were also bucking the trend in day to day. Bajaj Finserv, we saw that strong rebound coming from yesterday's lows. Remember, both of these stocks ended with downtick of 5 to 6%, Bajaj Finance and Bajaj Finserv yesterday, but Bajaj Finserv did recover by the end of trade today, up 2.5%. Adani Ports, Hero MotoCorp, ONGC were also gaining in trade. On the losing side, Tata Motors passenger vehicle segment declined by nearly 1.3%. Shriram Finance, Bharat Electronics, Grasim were also under pressure today. In terms of individual newsmakers, Kirloskar Oil, that one reported very strong set of numbers, and that is precisely the reason the stock is ending with an uptick of nearly 11.5% as we speak. Office Solutions, 59% drop in profitability for the quarter gone by, so that one was also declining in trade. So yes, Harsh, turned out to be a good day on the index level, but we had a whole host of individual buzzers from the broader markets based on earnings.
Well, yes, we did. But, what we're going to try to focus on today, and we'll speak with Kunal on this as well. Kunal, the breadth is what really stood out today. We saw broader markets participating. We've not seen that over the last 8 trading sessions or thereabouts. We've seen that today. Mid-cap and small-cap indices both in playing in tandem with the Nifty.
Correct. Yeah, so that's the positive side. Mid-cap index hitting the new highs, lifetime highs today. So that's another evidence that we are looking at the market sentiment improving, and with sentiment becoming a lot more positive, you will start to gradually see that the market breadth keeps on opening up at every now and then. Breakout sustaining, volumes moving up higher for stocks which see those strong price upticks and then follow through up moves. So I think all of that comes in patterns when you see such kind of a breakout on the overall mid-cap index.
IT, pharma, auto were outperformers. Now, IT has been that consistent one sector which has stood out all through this week. Upsides from here as well. I know you're bullish, but give us your top 2 ideas in IT and what are the levels you should look out for.
So I'll go with the stronger name over here. Persistent is the strongest from the mid-cap IT name. Perfect. That still looks very good. In case if I have to add on to maybe one more mid-cap IT name, I think Coforge is something which also starts to look attractive, heading towards a breakout of an inverted head and shoulder pattern. And from the larger cap IT names, I think it's going to be a tussle between the likes of Infosys as well as TCS, because both of these charts are almost poised in an exact manner closer to a breakout of their last 3 months of consistent swing high. So be it Infosys closer to those 1530, 1540 mark, or TCS just around that 3100 plus levels.
Okay, so that's the view coming in on IT and several stock-specific ideas from Kunal. But that's all the time we have on this edition of the show. Thanks so much for tuning in. But more news and updates will continue on the other side. Stay tuned.